So, very good evening to all of you from India. Very good morning from here. So, today we are having the session on law and DT. Okay. So, the session today is on law and DT. With regard to the law, one chapter we completed from the main material. I told you some small chapters we will do directly from the charts. So, today we are going to start with the dividends. So charts discussion will be completed with the full conceptual clarity. Dividends chapter will complete. Next law class we will complete question bank also on dividends. And in DT, we are going to start with the most important aspect called as scope of total income. Means whether resident, not ordinary resident, what taxation, global income is taxable or Indian income is taxable. Lot many questions you might be having. So all those questions will be answered in the today's class. Okay. So law dividends chapter, DT scope of total income concept. Okay. So these two we are going to do in the today's class. So 5 minutes gap I will give. Please everyone assemble fast. Share the class details to all your friends. Please ask them to join. Dividends chapter pakka there will be a 5 marks question. Okay, once the dividends is completed, next again we will go to the main content chapters like incorporation. I told 6 chapters I will discuss in depth. In that incorporation is there. So one chapter preliminary is already in depth we discussed. So let us not everything be like that. One fast going session we will take. So dividends we will discuss. Question bank also will complete. So accordingly please plan yourself. So if you have the charts material with you, please open. We are going to start with declaration and payment of dividend. 5 minutes gap I will give. Please everyone join fast. We'll begin. We begin, everyone. Please give a reply. Okay, done. Let us begin. Okay, so the name of the chapter we are going to start is Declaration and Payment of Dividend. So, first class, the first part of the sessions we have completed so many definitions as well. Very, very important concepts, exam questions, everything has been completed by the previous class. Now we are going to start with another chapter called as Declaration and Payment of Dividend. So today's chapter is Declaration and Payment of Dividend. 5 marks question guarantee in examination. Section range from 123 and 127, in between the sections will be. So 123, 124, 125, 126 and 127. Along with that, there are some important extra discussions will be there. With that, this chapter will get completed. Name of the chapter, Declaration and Payment of Dividend. I will try to cover as much as possible in the today's session with the logic, analysis, everything. Okay, well, first of all, everyone, please tell me, are you all ready to start with the chapter? Everyone? Shall we begin? Yeah. See here. First point number 1. Name of the chapter is Declaration and Payment of Dividend. So first we need to know what is a dividend. What is a dividend? Financial point of view on discussion with regard to the dividend will happen in FM. Dividend in real form, when it is paid, how it can be paid, law relating to that, we will see in law. Something which is not a dividend will be treated as a dividend. We call it deemed dividend under section 2 clause 22 income tax. So in all the 3 papers what I take, there is one common concept called as a dividend which I love the most. Reason, dividend concept के perceptual differences are there. FM perception dividend is different. Law says dividend in a different way, company law. Income tax will say what is not a dividend also has dividend. Loan is not a dividend. Income tax loan is a dividend. Reduction of share capital is not a dividend. Income tax reduction is a dividend. Liquidation time distribution is not a dividend. But income tax is a dividend. Understood the point or not? So like that, what is not a dividend becomes dividend under income tax. What is a dividend is actually said in Companies Act. How dividend impact a company is said in FM. So the 3 papers which I take, All the three papers, like diversified discussion will be there in dividend. If a person can understand all the three, he will become king in understanding the dividends discussion. Clear, everyone? Shall we? Okay. So let us now begin with. So, Companies Act law, what is a dividend? Okay, Companies Act. One second. Companies Act law, what is a dividend? How it is actually taken on perception? Section 2 clause 35 la, what they said, let us do some analysis and then we will be going into the other discussion regarding the dividend. Okay, first one. What is a dividend as per Companies Act? They said like this. Section 2 clause 35 of Companies Act said that, Section 2 clause 35 of Companies Act said that dividend includes interim dividend. Dividend includes what dividend here? Interim dividend. So section 2 clause 35 of Companies Act said dividend includes interim dividend. Dividend includes interim dividend. Okay. So now question will come. Sir, what do you mean by dividend includes an interim dividend? Listen. They said dividend includes interim dividend. Dividend includes interim dividend. Say, before going into that, how to interpret this statement? Wherever in this chapter the word dividend comes, it also includes interim dividend. Means law applicable for final dividend will equally apply also to interim dividend. And every time I need not tell this section is applicable for final dividend, interim dividend, I need not tell. Okay. For example, I will give you. Whenever dividend is declared, deposit in a separate bank account within 5 days. Now question, which dividend? Interim or final? Dividend includes interim dividend. So for both. Okay. So dividend once declared should be paid within 30 days. Then I asked, final interim? Both. Dividend includes interim dividend. Okay. However, this however is important. However, in any provision in this chapter, interim dividend ki separate provisions are drafted which are different from that of final dividend, then follow that only. So, how to interpret the term dividend includes interim dividend? All the provisions that are applicable for final dividend equally applies also to interim dividend, except where it is otherwise specifically provided. Means clearly they said this provision is applicable only for interim dividend, then it will not apply to the final dividend. Understood the point clearly? Yeah, clear everyone? Okay, how to understand? See, when section says generally something, okay, they use the word dividend, then this includes the final dividend, interim dividend also. But on a particular context, for interim dividend, they separately discussed anything, then that will not apply to the final dividend, that applies only to interim dividend. First of all, everyone, please give a reply. Did you understand this part of the discussion of first? Clarity, yeah? Everyone. Okay, one discussion over. So what is the definition of dividend? As per section 2 clause 35 of Companies Act, dividend is defined as dividend includes interim dividend. That means all the provisions of law that are applicable for final dividend equally applies to interim dividend unless otherwise specifically provided. Clearer? Okay. So that's the point here. So dividend includes what dividend? Interim dividend. Dividend is declared as a proportion. Proportion means percentage of nominal or face value. Nominal or face value. Sir, what does it mean? See, dividend is always paid as a percentage. Example, I will tell you. What company generally tell? This time we are declaring 20% dividend. We are declaring 35% dividend. What do you mean by 20% dividend, 35% dividend? Percent on what? some amount into 35, some amount into 20 kada. What is this amount? This is face value. This is face value, also called as par value, also called as nominal value. You call it in any name. You call it face value, par value, nominal value, whatever value you want you call. But on that we will apply a percent. Percentage is also called as what? Proportion. Is also called as what? Proportion. So therefore dividend is declared as a proportion of nominal or face value of a share. Okay, next. Okay, next. There are two types of dividends. Number one, interim dividend. Number two is a final dividend. Number two is the final dividend. Sir, what is the interim dividend? What is a final dividend? First, let us discuss on that particular point. Okay, see the screen. For the financial year 25-26, AGM is conducted on September 10th, 26. For the financial year 26-27 and the next financial year, AGM is held on September 18th, 2027. In this AGM, dividend is declared. In this AGM also, dividend is declared. These two dividends which are declared at the AGM, we call as final dividend. We call as what? Final dividend. Next. On 23rd August 2026, or let us say for example on 3rd June 2027, 3rd June 2027, or let us say 3rd March 2027, some dates, okay, some dates somewhere in the middle, they declared dividend also in these particular periods. So company declared 4 dividends. One dividend in the AGM, another dividend in the AGM, one dividend in between two AGMs, another dividend also in between two AGMs. These two dividends I call interim dividend. This dividend I call final dividend. Whatever provisions are applicable for final apply to interim. But if there is any section which clearly mentions that this is applicable only for interim, apply that only for interim. Don't apply for the final. So provisions applicable for final are applicable to interim, but provisions applicable for interim may not apply to the final. Understood the difference or not, everyone? I want a reply. Provisions applicable for final dividend will apply to interim, but provisions applicable to interim won't apply to final. Because interim dividend do not include final dividend. Final dividend includes interim dividend. Clear, everyone? Okay. Yeah. So we completed meaning of understanding two types of dividend. So dividend declared at the AGM, final dividend. Dividend declared between AGMs, interim dividend. Okay, va? Next issue. See, final dividend, there is a rule. There is what? A rule. Final dividend is having a two-step procedure. Step 1, recommended by the board of directors. Recommending means proposed. And a board will tell this time we wanted to propose 25% dividend. 25% on what? On face value. They will propose. And they will propose and put it before whom? Shareholders in a AGM. What is the work of shareholders now? Either approve or disapprove by ordinary resolution. More than 50% said yes, that dividend is declared. More than 50% said no, that dividend will not be declared. However, if members by demand said that, and a majority members on demand requested the company to reduce the rate of dividend, generally don't happen, but if they wanted to request, they can happily request for a reduction in the rate of dividend. Okay, they can also ask board of directors, don't declare dividend, keep it with the company, investor, next year give us a bigger dividend. Like that they can request the board of directors. Therefore, the rate proposed by the board can be reduced but cannot be increased by the shareholders. So, first it should be recommended by the board. Step 2, approved by the shareholders at a GM. Okay, rate of dividend recommended by the board cannot be increased by the shareholder. If wanted, they can reduce, but they cannot increase. Mark this point, very, very important. Next, there is one provision in table F. Table F and incorporation chapter, I will discuss it in detail. Just remember the word table F. Table F is a schedule in Companies Act. Companies Act, there are 7 schedules. 7 schedules. So first schedule is table F. Tables. In the table F is articles. Table F, one of the provisions they have clearly said like this. Once dividend declared, it becomes liability or a debt of a company and hence cannot be revoked in any case. Sir, I didn't understand. Listen, I will tell you. Dividend declaration, did I ask you? No. Board of directors need not propose. See, important things that you need to understand is there are 2-step procedures I said. Dividend is recommended by board, declared by shareholder. Hello, who asked you to recommend first? Did I ask you to propose? If you propose, then shareholders ki there is a right to either decline or accept. If you did not propose, why we will involve in that matter? Who asked you to recommend a dividend? Did I ask you? No. The moment you propose and we declare, that's it. The amount whatever you recommended and we declared will become a debt due by the company to the shareholder. Listen to my words clearly. Okay, ma? Listen. Board of directors are preparing the financial statements. While preparing the financial statements, one of the important statement is a balance sheet. Balance sheet la what they have written? They have written on liabilities, short-term liabilities la proposed dividend. Proposed dividend. June la they proposed. Okay. Proposed dividend at the rate of 35% came to 35 crore. Example. Take it easy. So 35% came to 35 crore. Let us say they proposed. Balance sheet la they have written proposed dividend. They have written proposed dividend. Okay. Cash available in the company is only 20 crore. Dividend should be paid only in cash. And cash means cash in hand, cash at bank. Total 20 crore. They did not see that. By mistake, they proposed 35%. Sorry, these people are sleeping fellows. Now what happened? This balance sheet went to AGM. Shareholders approval kit went. Shareholders have declared the dividend at the same rate of 35. The moment, I repeat again, the moment shareholders declare, this money will become debt due by the company. Company will become the debtor, shareholder will become the creditor the moment you declare the dividend. Because you are saying that this much money does not belong to company, this much money belongs to the owners, being the shareholder. So, proposed dividend money will become a liability to the outsider. Therefore, the moment you declare, and the moment shareholders declare, it becomes a debt due by company. Debt due by company. Therefore, once declared, revocation is not possible. What is not possible? Revocation is not possible. Revocation means what? By mistake I declared 35, actually 20 available. That we don't want anything else. That is your mistake. Okay, for that you suffer by not paying. Go to jail. Directors ki punishment is there if they do like that. So dividend once declared, revocation concept illa. There is no question of revocation. Dividend declared becomes a liability, becomes a debt. Becomes a debt to whom? Company. Who becomes a debtor? Company. Who becomes the creditor? shareholder. You have to pay them. That's all. That's their money now. Clear, everyone? Understood the point? I'm talking to you all. Okay. Okay. So next. So what we understood now, final dividend is recommended by the board, approved by the shareholders in a AGM. Rate of dividend cannot be increased once proposed. Next, once declared, it becomes a debt. Okay, no revocation possible. There is one exception to this. That's what we are going to discuss. Interim dividend declared by the board. I repeat, interim dividend declared by the board. Interim dividend key, there is no concept of recommending and proposing and declaring. Adilla. Direct declaration. Board of directors will declare. This is what I mean by unless otherwise specified. Normally, dividend, what is the rule? Recommended by board, approved by shareholders. Also called as proposed by board, declared by shareholders. Correct? That rule is applicable only to whom? Final dividend. Why? Because for interim dividend, there is a separate provision created. Clear? So, interim dividend, what they said? Section number 123, subsection number 3. If you want Bayer Act, you can go there and read. This is not the time to read the Bayer Act. Na? What we discussed? Companies Act totally in our syllabus 6 chapters in depth we will discuss. Big chapters. Incorporation. Next, share capital. Next one, management administration, accounts. These chapters we are going to do full post-mortem. But other chapters we will do through the charts. All important concepts we will cover along with the question bank. That's what the promise was. Correct? So therefore, it's a hybrid kind of class. Nowhere found in India again. So what chapters we need to give more stress, we will give there. What chapters doesn't require that much of stress, we will go through the chart, but we will do every analysis. Okay, wow. So what is the point here? Dividend will be declared by the board. Dividend will be declared by members. Members. Who propose? Board. When? If it is a final dividend. Interim dividend, the two-step procedure is not there. Direct declaration. Who will? Board of directors will declare. Number 1. Okay. This is a point which separates interim dividend from final. And interim dividend can be revoked with consent of all the shareholders. With the consent of all the shareholders, interim dividend can be revoked. So final dividend ki revocation not possible. Okay, ba? Okay. Sir, what about these two? These 2 points you forget about it. We will discuss about that much later. Okay, ba? Much later we will discuss. Next. So about interim dividend, I put a box there, means I will discuss that later, not now. Whenever I put a box here, those points I'm not going to discuss now. At the end of the chapter, I will discuss. Okay. And this entire box I'm not going to discuss now. Later we will discuss about that part. Okay. So now we are going to discuss on final dividend. Final dividend source of declaration means what? From where you have to declare the dividend? You can declare the dividend out of current financial year profit after providing for depreciation, previous financial year profit after providing for depreciation. Okay, or out of both, sometimes state government or central government will give a guarantee to the company, you take money from the shareholders, dividend declaration is our headache. Let them invest in your company. Your company is in SEZ area. SEZ has to get developed. So let the shareholders invest. Do they have any doubt on whether you will pay dividend? Tell them that government will pay them. So this is how money is provided by central government or state government in persons of a guarantee. So now start the point. What are the sources of paying final dividend? Current year profit, past accumulated profit, or both, or sometimes money guaranteed by central government, state government. Easy way to understand. Money guaranteed by central government, state government. That's it. But very, very important point we need to understand. See, Previous financial year profits means what? Accumulated profits. Accumulated profits like revaluation will be there, revenue reserves will be there, capital reserve. Which reserve we should take? That's why previous year profit after providing for depreciation. Okay, it's not free services by mistake. Free reserves. Okay, P&L account credit balance and free reserves. Free reserves has to be taken. Sir, what is a free reserve? Free reserve is a reserve freely available for distribution of dividend. Freely available for distribution of dividend. So that's why see here. Free reserves are reserves available for distribution as dividend. But the following reserves are not treated as free reserves. Okay. What reserves are not free reserve? Unrealized gain, notional gain, revaluation reserves, capital reserves, fair value gains. Fair value gains. See, I will give you examples for each of them very fastly. Please try to understand. Okay, well? Listen. First one. What do you mean by unrealized gain? See, company is there, invested in shares. Can a company invest in another company or not? Yes. So my company invested in another company shares. Invested 1 crore. Okay. Market shares like invested 1 crore. This now that company share doubled. My 1 crore investment became 2 crore. I did not sell. See, company invest. There is a company. Okay. X Limited. X Limited balance sheet like investment in Y Limited is there. 1 crore. When they invested? 1st April 2026 they invested. 31st March 2027 this became 2 crore. I did not sell. Value became 2 crore. Now the balance 1 crore is there. Now I got a gain. But realized or not yet realized? Not yet realized. This is called as an unrealized gain. That should not be forming part of free reserve. No. That is not a realized gain. Therefore, that cannot be treated as a free reserve. Hopefully everyone understood. Next. My company is having a factory building. My company is having a factory building which is granted by the government. Government granted me that factory building, and a factory land building government has given to develop that says area. Activities I will carry on with my out of pocket money. Okay. So land building is given by the government. I need not pay any rent. My competitors are doing the business who are paying a rent of 1 crore per month and 12 crore per annum. But I am not paying that. So that 12 crore I am saving. So therefore that 12 crore I want to show it as a profit. Notional profit. That will not form part of free reserve. Next. I have a land. That land worth is 1 crore. Now the worth is 10 crore. If I sell them, I revalued it. It became 10 crore. 9 crore extra came na. I wanted to show it as a free reserve. Really it's a free reserve? Not a free reserve. Capital reserve. I sold a capital asset. I got a gain. That's a capital gain which is in capital nature. Dividend is a revenue in nature. Capital reserve is capital in nature. You cannot use that money to pay the dividend. Next, fair value gain. That means change in carrying amount of asset and liability which is recognized in equity. Sir, what is this? NPV. Net present value will be there na FML. What is NPV? Discounted inflows are going beyond discounted outflows na positive NPV. Positive NPV is an expected amount. It's not actual amount. That amount should not be taken into free reserve. Okay. So dividend can be paid out of what? Current year profit, past profit, but both cases after providing for depreciation, sometimes out of both, are money guaranteed by CGSG. Let us discuss about first two. Third one is combination. So current year profit and this year P&L. Second, past accumulated profit means free reserves. Free reserves and free reserves means reserves available for distribution as dividend, but does not include what? Unrealized gain, notional gain, revaluation gain, capital gain, and very, very important, fair value gains should not be included. Next one. Payment of dividend. Sir, dividend will be paid to whom? Dividend will be paid to the persons whose names are in the register of members as on the record date. Not on board meeting date, not on general meeting date, not on any other date. whenever dividend is declared, they will announce a date called as a record date. On that day, whoever is a shareholder, on that day, how many shares you are holding, on the dividend will be paid. Next, dividend is payable to registered shareholder. If shareholder say pay to him, to his order I will pay. If shareholder say directly pay to the banker I will pay. Dividend shall be paid in cash, check, or a dividend warrant or any electronic mode, but not in kind. For example, I wanted to pay 1 crore, 1 lakh dividend or 5 lakh dividend. Instead of paying a 5 lakh dividend, I will give a Samsung, what to say this, OLED type of TV, which is worth 5 lakh or 5 lakh 10,000 like that. Can I? You cannot. So for dividend, once you declare, it should be paid only in cash, but not in kind. Okay, well, next. Next very important final point is before declaration of dividend, previous year losses and depreciation which were not provided in such years are set off against the current year profit or set off against current year profit. Okay, now listen carefully. Questions will come on a twist basis in this chapter, so attention to the detail. You should not read on an overall basis. Read the language. Before declaration of dividend, previous year losses and depreciation which are not provided in such years are set off against the current year profit. And do you know what he is saying? Current year there is a profit. Directly don't declare dividend. Reduce the unabsorbed depreciation. Reduce the unabsorbed business loss. Balance still if there is any current year profit adjusted, from this you need to pay the final dividend. Everyone understood the point clearly? Yeah? I want a reply. Okay. So with this, we completed the first chart on dividend. Okay. I will put it before you. Except interim dividend extra points, which I blocked at that time. Remaining all the things you have to read now. 3 minutes time. I want every one of you to read seriously and complete it. Completed? Okay. See, after every topic like this, I will give a 4 minutes time, extra time. Okay, such that wherever you want, you can read it and you can complete it. So the entire concept is completed now on the first page. Okay, first page of whatever the concept is there, we have completed everything in detail now. Okay, just a minute. Yeah. So now we completed basics of dividend and very important concept called as the sources of payment of dividend. In that, payment of dividend will be made only on the registered shareholders on record date, either to the registered shareholder, order of registered shareholder, banker, and it will be paid only in cash, not in kind. Okay, that is another discussion we learned. And before any dividend is paid, if there is any unabsorbed depreciation or unabsorbed business loss, first set off that. Balance amount will be available for distribution as a dividend. Okay, free reserves you will not include unrealized gains, notional gain, revaluation gain, capital gains, and fair value gains. Another point. Dividend declared at the AGM is final dividend, between the AGMs is interim dividend. Final dividend ki proposal and declaration and recommending and approving is there. What do you mean by recommending? Board of directors will sit in a board meeting. They will recommend. Managing director will tell, this time we are going to declare 35% dividend. Is it okay for all other board of directors? Board of directors said yes. Now everyone recommended. Okay, they are not declaring. Final dividend ki two-step procedure. First they have to propose it 35. Let them declare it 35. Now very good. If they wanted to declare, they can declare it a lower rate, but higher rate is not possible. That meaning of a recommended. Someone asked the question in chat box, sir, what do you mean by recommended? Recommended means board of directors got an idea to declare at 35. You can either say yes to that, or you can either reduce it, but you cannot increase it. Clear, everyone? Everyone? Clear? If there is no money, if they declare, that becomes a fraud by the company. Then dividend has to be paid out of capital, which becomes irrelevant. I will tell you about that. Okay. So now listen. Next, very important discussion we are going to make. So please concentrate properly. Mark this extremely important. Most important discussion we are going to make is, I told the interim dividend wherever comes, don't read now. Interim dividend separate discussion we are going to make at the end of this chapter. Okay. First, final dividend one very important concept is there. There is a company. That company is making losses, or that company is making inadequate profit, and profits are there. Yes, for the namesake it is there. But can I declare any dividend on that? You cannot declare a dividend on that. Sir, my company is having a profit. Okay, very good. Declare dividend. Yes, sir. My profit is 18 rupees 18 paisa. What you will do with that? Profits are there means profits are there, but they are not adequate to declare a dividend. So that case is called as a inadequate profits. or my company is having zero profit, exactly zero. That we don't call loss, we call it no profit. We call it no profit. And my company is having a loss. Loss is also called as no profit. So that's why lawmaker diplomatically uses the word in case of inadequate profits or no profits they will use. They don't use the word losses, because if you use in case of losses, exact zero will not be governed there. So therefore, to cover everything, they use the word inadequate profit. Means what? Profits are there but inadequate. No profit means what? Zero or less than zero. Everyone understood? Understood everyone? Okay. So now a company may declare dividend out of accumulated profits. Out of what profits? Accumulated profits of a previous year, which are transferred to free reserves subject to the following conditions. Okay. And simply, a company, if it is suffering with inadequate profits or no profits, it can still declare a dividend. It can still what? Declare a dividend. But there are four conditions. Let us read all the conditions. Please read. Dividend shall not be declared at a rate higher than the average rate of dividend declared by the company during immediately preceding 3 financial years. Okay, immediately preceding 3 financial years. Means what? See, they say like this. What is the financial year now? Now the financial year is 26-27. 26-27 financial year, you are having a profit. No, sir, I am actually having a loss, let us say. So, from the current year profits, can you declare dividend? No. From what you have to declare? From past accumulated profit. Okay. So, whatever I want, can I declare a dividend? No. There is a restriction. What they said, go back 3 financial years, 25-26, 24-25, 23-24. So 23-24, 24-25, 25-26. Now see how much rate they declared. So they declared 10%, 10%, 10%. So this year also rate will be 10% maximum. You can declare 5, 6, 7, 8, 9, 10. 11 not possible. Okay. So rate in 2026 should not exceed more than 10. Understood? So, average rate at which dividend is declared in the 3 immediately preceding financial year. Let us say I declared at 16%, 12%, 10%. Then total 16 plus 12 plus 10 divided by 3, 12.66% or 67% dividend should not exceed in the financial year 26-27. So, 16, 12, 10. Or another example. My company declared dividend at 20%, 30%, 10%. So 50, 60, 60 divided by 3, maximum not exceeding 20%, your rate can be in the year 26-27. Next, sir, my company declared 10% in 23-24. They did not declare anything in 24-25, but they declared another, say for example, sir, 12% in 25-26. Then how to do? Then I need to take 10 plus 12 divided by 2, 10 plus 0 plus 12 divided by 3, which is the right answer? In this case, I need to take 10 plus 12 divided by 2 or 10 plus 0 plus 12 divided by 3, which is the right answer? Let's see. Students will answer. See, dividend shall not exceed the average rate at which dividend is declared in the 3 preceding financial years. That's what they said. Okay, the answer is the answer is just a minute. Just a minute here. There is some problem in the note. Just give me 1 minute time. Yes. Okay. Now see here. So which of the following is a right answer? Okay. Let us see. Second one is the right one. Almost everyone also replied the same. Very good. Means you heard to the regular classes properly. So whenever I say average, it means a simple average. Means what? All the three you add divided by 3. Divided by 3. Okay. Now the question. So 10 plus 0 plus 12 divided by 3. 22 divided by 3 not exceeding 7.33%. 7.33%. Next example. My company is not incorporated in the year 23-24. Okay, in the year 23-24, not incorporated. 24-25, I declared dividend at 10%. 25-26, I declared dividend at 10%. Okay, what is the maximum rate? Same here also. Tell me how to do. 10 plus 10 divided by 2 or 0 plus 10 plus 10 divided by 3 everyone. In this case, this is the right answer. Yes, this is wrong. When this question will come, if rate of dividend is declared or not declared, question comes. In this case, company are not incorporated. How can you divide it by last 3 years? Divided by 3 is 3 years. Third year back, 3 years back, my company are not there. Then how can you divide? So therefore, whenever they use a simple average, you should go by common sense. Okay. So therefore, in this case, we should use the second one. We should use the first one in this case. Okay. So in this case, 10 plus 10 divided by 2, which will become not exceeding 10%. Not exceeding what here? 10%. Okay. So this is another discussion. Okay. Next. Sir, my company declared no dividend, no dividend, no dividend, sir. Last 3 years of dividend, sir. But this year, company had, sir, 3 years back, 23-24 year, super profit. 24-25, super profit. 25-26, super profit. Super profit came. The ruler, super profit comes, company has to declare the dividend. There is no such rule. Board of directors decided not to declare. They reinvested for growth equal to B into R. They wanted to retain at B and reinvest at R rate to get a growth. What's wrong in doing like that? They have done that. So they retained and reinvested. They did not declare dividend. Super profits say. Okay. Super profits came. They did not declare. So no dividend, though profits are there. No dividend, though profits are there. No dividend, though profits are there. This year they incurred a loss. But they thought, okay, anyway, last 3 years I did not declare. Let me now declare. Okay. But the problem is, rate at which you declared key, at least if there is 1 year rate, I can use 0 plus 0 plus some 10% divided by 3. But no rate is there. In this case, company cannot declare dividend. Like this, you should not think. Condition does not apply. And in the 4 conditions, first condition will not apply if company did not declare dividend in any of the 3 preceding financial years. This is the concept. Everyone, understood everyone? Okay, well. So, this is one important discussion here. Okay. So, dividend shall be declared at a rate higher than average rate of dividend declared by the company in the immediately preceding 3 financial years. Not applicable if dividend is not declared in all the 3 preceding financial years. Okay. One condition discussion completed. Another condition. Amount drawn from accumulated profit. Hey, listen, my company can declare dividend as per 123 out of current year profits or out of past accumulated or out of both. Okay, current year la profit illa. Okay, current year la profit illa na, the loss. So current year la there is a loss. Therefore, what I have to do? I have to go to the previous years. Previous years accumulated profits are there. From that I need to take. Accumulated profits means which profit? Revaluation profit. Free reserve. Free reserve through I need to take the amount. Correct? Free reserves through when I take the amount, there are conditions. First one, rate condition, we already discussed. Now, drawn condition and how much I can draw is the next condition. Amount drawn from the accumulated profits shall not exceed 10% of paid up share capital and free reserves as per the last audited financial statement. Intentionally, do you know what they will tell in the exam? They will give you 2 different balance sheets. Balance sheet as on the date of AGM. Balance sheet of the previous year which is audited. Then doubt will start. Which balance sheet numbers we need to take? Balance sheet numbers as on the date of declaration of dividend. Balance sheet of the year which is audited. Doubt will start. Therefore, I am telling you very, very clearly, we should take audited financial statement, the last audited statements. Okay, not on the date of declaration ki temporary balance sheet. I require audited balance sheet. Hey, I am talking to you, everyone. These are the things which will screw your mind in exam. If they wanted to test your ability, whether you understood the chapter or not, they will not ask you, write about interim dividend, write about 4 conditions. A fool will ask like that. They will directly test on your ability to point out minute details. So they will give you 2 balance sheets. One balance sheet and the balance sheet of the previous year. Are you understanding? Previous year audited balance sheet they will give. Second one, they will give balance sheet as on the date of declaration of dividend. They will tell it is audited temporarily up to the date. We should take last audited financial statements. Okay, well? Yeah. So that particular balance sheet only we should take. On that balance sheet, accumulated profit, paid up share capital and free reserves will be there, na? On that 10%. On that 10%. So 10% as per the audited financial statements we need to consider. So amount drawn from the accumulated profits shall not exceed 10% of paid up share capital and free reserves as per the latest audited financial statements. Okay. So what we discussed now, rate condition we discussed, amount to be drawn condition also we discussed. What is the rate? Rate should not exceed the average of rates at which dividend is declared in 3 years. Over. Second, rate condition over na? Can I draw whatever I want? No. The amount drawn from the free reserves should not exceed 10% of paid up share capital and free reserves. Okay, very good. Next. The word used is paid up share capital. They did not use the word paid up equity share capital. So you should add all equity preference. This is another twist in this point. Next. So you drawn the amount. Okay. The amount drawn is first utilized to set off losses of the financial year in which dividend is declared. So I drawn amount. From that amount, first set off the current year loss. Still amount is there, na? Then you can declare the dividend on that balance. But very, very important is how much you are drawing from accumulated profits. How much important it is, that much important is how much a balance should be left out after declaring the dividend. Sir, I did not understand. See, there is a box full of gold. Okay. First, what they said, how much to take the gold out, also they said, how much gold should be left out after drawing, also they said. Both they said. Here, gold is the cash. So, how much cash I can take? Condition 2. How much cash should be minimum there after taking? Condition 4. So, the balance of reserves and free reserves after withdrawal and adjusting the loss shall not fall below 15% of paid up share capital as per the last audited financial statement. Okay. Next, this rule, under this four conditions rule, is not applicable for 100% government company. What is 100%? Wholly owned government company. Means a public holding illa, full government holding. For them, it's not applicable. Okay. Next, if year to which free reserves relate is given, it is assumed that current year loss, if any, is already adjusted. Otherwise, current year loss has to be adjusted from free reserves. Okay. And in exam point, exam they gave free reserves 50 crore. Free reserve 50 crore. You assume that current year loss is already adjusted to that. There is a condition, na? Current year loss has to be first adjusted and then only you have to declare. Assume that that condition is already fulfilled. Okay. Read the four conditions before we do one illustration in that regard. Okay, well, everyone, enough time I have given. Okay, see. So to understand this, I will give you one diagrammatic presentation which I usually give in any class for you to understand visualization. Sorry. Okay, see here. Let us say this entire box is accumulated profits. Entire box. Okay, this is the accumulated profits box. Okay, see here. First condition, what they said. Condition 1, they said rate of dividend for the current financial year should not exceed the rate of dividend in preceding 3 years as an average. Condition 1. This is general condition. Next, the amount drawn from the accumulated profit. This is amount drawn. This is balance after withdrawal. Amount drawn should not exceed 10% of paid up share capital and free reserve. Once you draw that amount, you have to do the condition number 2. Condition 3 annana, you have to reduce current year loss. Okay, current year loss. Balance available for declare. Balance is not there, you cannot declare that dividend even after this. Next, balance after withdrawal should not be less than 15% of paid up share capital. Okay, if you want, you can draw this somewhere. Please draw it somewhere, wherever the book you are following. If you have the charts, follow the charts. If you have any other book, you follow that. Okay, but draw this clearly. 4 conditions. I forgot to write here. Condition 2, condition 3, condition 4. Okay, condition 4. Questions on this, problematic part on this, we will do in the next class. Anyway, in the next class, we will do exam questions. Now, at that time, we will do the questions. First sessions, full discussion. Next practical questions we will do at that time. Okay, let's not deviate from our general pattern. Everyone completed? Okay. Don't ask any extra question on this. We will discuss enough amount of questions when we discuss question bank. Okay, va? Question bank like n number of questions I kept. Okay, so at that time we will discuss. Okay, conceptually, are you having clarity? Only you today you put it in mind. Conceptually means what? Rate condition is the first condition. Average rate should not exceed the average at which the rate of dividend in the current financial year should not exceed the average of rates at which dividend is declared in 3 financial years. 3 financial years, if the dividend is not declared, then the rate condition does not apply. Remaining 3 conditions only you should see. Amount drawn should not exceed 10% of paid up share capital free reserves. Very good. Second. And third, once you draw first set of the current year loss, balance only will be available for distribution. And fourth condition is amount after withdrawal, the balance should not fall below, should not be less than 15% of paid up share capital. And that's what you need to discuss today. Theoretically, are you strong? You decide today. Practically, I will make you strong in another one session when we start doing the question from the question bank. Practical insights we will see then. Are you clear, everyone? Okay. Next one. Next discussion. Next. See. Next one, we are going to discuss about section number 126. Section number 126. What is section 126 talking about? Dividends kept in abeyance. Dividend kept in abeyance. Dividends kept in abeyance. Sir, I will first explain. After that, we will read it. Okay, ma? Listen. Listen, I will explain only once. Only once. If you listen, you will listen. That's all. Okay, ma? I'm not going to repeat even for the second time. I will tell only once. Within this discussion, I will repeat. But once everything is completed, I won't repeat again. So if you listen, you will listen. That's it. Don't ask me any extra questions on this because I'm already going very slow into this. Okay? Attention to the detail. That's it. If you do not listen, that's not my mistake. I'm starting. Okay. See. Today, a transferor, B, a transferee made a transaction on share transfer. A transferred shares, B paid consideration. Paid consideration. Share transfer means what they have done? Two things A will give to B. Share certificate and instrument of transfer, also called as share transfer deed. Share certificate is a proof that A is the owner. Share transfer deed is a proof that A is consenting to sell the shares to B. Okay, transfer. So two documents will go to Mr. B. Now, in the records of company, whose name is there? A. Now, whose name will be there? Still A name will be there, because A and B made a private transaction. How company will know that A sold shares to B, B gave money to A, share transfer deed signed, executed? How would anyone will know? They will not know unless you intimate it. So, in order, B name has to come in the register, because what we discussed in the previous part of the class, dividends are paid only to the shareholders whose name is in the register. Whose name is in the register now? A name. A sold or did not sell? Sold. Who purchased? B. Paid or not paid? Paid. Share transfer deed transferred or not transferred? Transferred. But transfer is not yet registered. Company records for still A name there even today. So, Companies Act, there is a section called as section 56, share capital chapter. When we come there, I will discuss in detail. In that section, they say whenever transfer happen between two parties within 60 days of transfer, within how many days here? 60 days of transfer, within 60 days of days of executing the document. Share transfer deed is there na. This share transfer deed will be executed. Executed means signed. From the date of executing the share transfer deed, 60 days you need to send the share transfer deed with the share certificate to the company. Such the company will check, okay, share certificate, okay, whose name is there? A. So A is a real shareholder. Check our records. Yes, A is a real shareholder. Share transfer deed. Signature of transfer is there? Yes. Signature of transfer is there? Yes. That's it. Stamp. Transfer will be done in the name of B. This is a procedure of transfer. We will discuss much about this when we come to section 56. Okay. So, T60, he behaved like an actual Indian. Last date we will do things now always. So, T60 is the last date for delivery of instrument of transfer and share certificate to the company for registration. I sent it for registration. Let the company take sweet 6 months or 1 month or 2 months or time. No worry. Let us take two different situations. Let us take what? Two different situations. See, situation 1, T70, T70, T70. Transfer is registered. T70, transfer is registered. T75, situation 1 again. T75, situation 1 related. Dividend declared. Transfer registered na, B become the registered shareholder. Dividend will be paid to him. Dividend will be paid to him. Now, situation 2. Situation 2. T70, T 80 transfer is registered. Until this day, B became a registered shareholder. B became what? Registered shareholder. Okay. B became registered shareholder. Just a minute. I will make a small change. Gap I will give and write such that you will understand easily. Okay. See. Okay. Now listen. T90, small change. T90 transfer registered. B becomes a registered shareholder. B becomes registered shareholder. However, T87, situation 2 related. T87, dividend is declared. Dividend is declared. Okay. Question 1. Dividend will be paid to A or to B? Question 1. Next case. T115 transfer is registered. B became a registered shareholder. T90, T90, let us say like this, T80 dividend is declared. Dividend paid to whom? A or to B? Situation 3. Okay. First of all, everyone tell me one answer. I am not asking any question to you. Don't give any answers in the chat box. Okay. Your answers are wrong actually. Okay. So please listen. We did not complete. I am writing a question. For all those question marks, I will fill the answer. Okay. Listen. This is the entire 3 different cases we are going to visualize. If you have a clarity on this, no new question can come in exam. Even in a worst case, you will do in the exam very well. Okay. Let us have a discussion now. They say like this. Whenever transfer happen between two people under two persons, first requirement is share certificate is the mandatory document. Second one is instrument of transfer. Second one is what transfer? Instrument of transfer. Share certificate is a proof that transferor is the owner. Instrument of transfer is a registration document which gives a proof that both the parties are consenting for this purchase and sale. Transfer is purchasing it, transferor is selling it. What is the proof that both are consented? There is no force signatures are required. Execution they call. So once the share certificate is executed, within 60 days you have to submit the shares transfer deed along with the share certificate to the company for registration. You are sending it. Registration will not get completed immediately. Okay. First to focus on situation 1. 2, 3 you forget. First to focus on situation 1. Situation 1 lo what happened? T60, my documents reached company. My documents reached company. T70 ki registration completed. So B became registered shareholder. T75 ki dividend declared. Then what happens? The dividend will be paid to B. This is a plain case. Section 126 does not apply in this case. Section 126 does not apply in this case. Okay. Second case. I sent the document to the company within 60 days. T60 ka I sent. Okay va? T87, T90 ki registration is completed. T90 what is completed here? Registration is completed. But problem is T60 I sent, T90 ki registration completed. Between that day T87 dividend declared by the company. Now problem will come. Dividend will be paid to A or B. Problem is, see, A will argue now. Who will argue? A will argue. What he will argue? Array B, today is T87. As on T87, registration is not yet done. Because I gave you T90 registration completed, you know. But on T87, we don't know that in T90 registration will be done. Na? So what B will ask A? B will ask an obvious question to A. What he will ask? A will ask an obvious question to B. A will ask B, let's go by law. Whose name is there in the register? B say, your name is there. So therefore I will take the dividend. Then B will tell, how much anyayam it is? Nyayama pata, if you see the situation, though you are the owner, money on that shares I already paid you consideration. Na? Registration is pending. I paid you entire amount on shares. And though not on the documentation I am the owner, I paid money to you. Na? So the anyayam, if you do like this, so like this B will argue. A will argue that no, as per law I am registered. B will tell no, I paid you consideration, I am the owner. In this case, there is a dispute. There is a dispute. Whenever there is a dispute, don't pay dividend to A, don't pay dividend to B. Unless registration is completed, transfer this dividend to unpaid dividend account. Unpaid dividend account. Now 3 days after, 90th day, what happened? Transfer is registered in the name of B. Means shares are registered in the name of B. Immediately from the UPD account, money will be paid to registered shareholder being Mr. B. Okay va? Next case. T60, I sent documents to the company for registration. T80, T115, and after 55 days, transfer is registered. Some problem came in documentation, company took time. So after 2 months after, almost, transfer is registered. In whose name? In the name of B. B are a registered shareholder. So now B become the registered shareholder on which date? T115. But on T80, dividend is declared. And T60 is the date on which we sent documents. T115 is a registration completed date. Previous example ki, this example ki, what is the difference? Previous example, gap is only just in days, 2-3 days. But here, it crossed 25, 30 days also crossed. Correct? Even then concept is same. In this case also, both of them will fight. What exists? Dispute exists. Dividend will be paid to A? No. B? No. Which account we will transfer? Unpaid. Transfer to unpaid dividend account. Till the registration is completed. Till the registration is complete. Till the dispute is settled and registration is completed. Put it in unpaid dividend account. Don't pay to A, don't pay to B. Super deal. Now what happened? T115 ki registration completed na. Immediately transfer this amount to, immediately transfer this amount to Mr. B. Sir, why you are explaining the 2 times, sir? My time waste. Anyway, situation 2 also same, situation 3 also same. Number of days increasing. First point number 1, Kaushik Mukesh is not a fool. I explained this with an intention and a reason also. If you observe, the gap between these two is only 3 days. The gap between these two is more than 30 days. More than 30 days. Dividend declared on T80. Dividend declared on T80. But paid on T115. 115 minus 80 means how many days here? You take 115 minus 80. How many days? 35 days. Correct? So, including if you take the days, 36 days totally. Sorry, anyway, more than 30. That is the clarity. Normally, as per section number 127, dividend declared should be paid within 30 days. Should be paid within 30 days. And not more than 30 days, we have to pay. Or else, directors ki imprisonment, company ki 18% simple interest. Punishment is there. Directors ki imprisonment plus, okay, not less than 1000 fine per day for directors. Company ki 18% simple interest has to be paid. It is punishment for not paying the dividend after declaration within 30 days. But here what happened? I declared on T80, but I paid on 115. And a gap between both the dates is going beyond 30 days. Yes or no? So, therefore, company has to pay, the directors are imprisoned, 1000 rupee fine minimum, company 18% simple interest. No. Whenever 126 section apply, whenever, I will write, here also 126 will apply. Here also section 126 will apply. Whenever 126 is applicable to the case, and if there is a dispute in right to receive the dividend, how come company can even pay? Therefore, this is exception. This is a exception. So, this penalty provision or the punishment provision is an exception when there is a dispute. That's why 127 section, if you read, normally if the dividend is declared and not paid within 30 days, directors liable for imprisonment, directors liable for a fine not minimum 1000, company liable to pay simple interest at the rate of 18%, but that does not apply in 5 exceptional cases. Other third exceptional case is if there is a dispute in right to receive dividend, that is section number 126. So, if section 126 is invoked, section 127 exception is there. Even though the time gap between declaration and payment is exceeding 30 days, punishment will not be levied because there is a dispute in right to receive the dividend. I am not in a position to pay. I am ready to pay. But since the ownership is not claimed properly, I could not pay. That comes into the exceptions to section number 127. Other discussion that we are going to make now, and we have already completed. Everyone, answer yeah. We completed the holistic understanding of this concept. Give a reply. Did you all understand the discussion clearly or not? Okay. See how much discussion we made on one single section. So much concept is there. Okay. Okay. Now, very nice. One last point before we close the today's law class. Okay. Listen, what is the discussion? See, when 126 will apply? When there is a dispute. When dispute is there, if no one agree to a conclusion. For example, if a situation comes where A transfer or himself said that pay dividend to B, pay dividend to B, and he himself has given a writing to the company saying that pay dividend to B, I took money from him already. If A himself is ready to transfer the dividend to B, then 126 do not apply because there is no dispute at all. Understood everyone this point? Everyone? 126 apply only when there is a dispute. When dispute will come, if none of the parties are coming to a common conclusion, amicable solution, then the problem will come. If any one of the party agrees to that, what is the problem? Dispute will not be there. So, అదే 126. Section is very small, but sound boom. Okay. புஷ்பா மூவியில் ஒரு டைலாக் இருக்குண்ணே, புஷ்பா just 2 words, नाम छोटा है but impact boom, அந்த மாதிரி. So section is very small 126, but concept fire flower இல்லை. If instrument of transfer is delivered but not registered by the company shall transfer dividend on such shares to unpaid dividend account, except if it is authorized by the registered shareholder in writing to pay the dividend to the transferee. And if that person itself is dying to tell the transfer or I pay to him, then why you are doing over action? Then company is creating a dispute. Okay, next question. Sir, last and final discussion today before we close. Sir, dividend declared now, okay. If bonus shares, right shares comes, then also it will be kept in abeyance. Okay, any kind of right shares, bonus shares declared in between dates, same rule, they also will be kept in abeyance. Means what? Abeyance means kept aside. Once the dispute is settled, we will transfer. Okay, well, with this we completed half the dividends chapter here. Okay, half the dividends chapter we completed. Next class, first 1 hour we will complete entire dividends. Half an hour we will try to cover as many questions as possible. The next class, the balance questions we will cover, and then we will be going into another lengthy chapter called as incorporation and incidental matters. Okay, well, so this is our targeted plan here, everyone. Clear? So everyone, please tell ya, did you all understand the today's session on law? Are you all confident about this particular segment? Okay. Okay, thank you. So this is the point here. So take a break and come. Next session will be direct tax. Can we continue the DT now? So will you provide PDF? Which chapter PDF? Residential status. So please put the message in all the groups. Yeah, let everyone join. Ask everyone to join fast. If any document is not having copyright, I will only share. Okay. So let us start with the DT class for today. Please listen carefully. So today in this lecture, we are going to start with section number 5. Last class, complete analysis on section 6 residential status is completed. Every clause, every provision we made an analysis from the Bayer Act itself. Now we are coming directly into section number 5. Okay. So from now, Bayer Act discussion we are not going to do directly from the notes. We are going to understand the balance part of this chapter. Okay. Section 5. Section 5 will be talking about the scope of total income. Scope of total income. And how taxability will come to different categories of people. Resident, resident and ordinarily resident, resident not ordinarily resident, and a non-resident. How taxability will come, we are going to understand clearly now. Okay, well, let's start. Types of incomes covered by section number 5. First, type of income number 1. Income received in India. Income received in India. Whoever you are, first listen what are all the 8 types of income. Okay. In the previous year, I had income. I can have income in 8 different types. Incomes that are received in India. Second, incomes that are deemed to be received in India and are really not received. I deem that it is received. Income accrues in India. Income arising in India. Income deemed to accrue or arise in India. Income deemed to accrue in India. Income deemed to arise in India. Income accruing outside India. Income arises outside India. All these 8 incomes are in relation to the previous year. If you merge two points, how it look like, I will tell you. First one is independent, income received in India. Second one is also independent, income deemed to be received in India. These two are about the receipt. One is actual receipt, another one is a deemed receipt. Both in India. Next, income accruing or arising in India. Income deemed to accrue or arise in India. Income accrue or arises outside India. Right, technically how many? 1, 2, 3, 4, 5. Totally, I have broke them into 8 different parts. Okay, first read all the 8 properly before we start with the analysis, because the next analysis after this will be dependent on how good you are in remembering all these 8. Okay, read them. 1 minute time I am giving to everyone. They are asking one question in every exam from the segment called as scope of total income. Okay, completed. Can I continue? Okay. See, there are 3 individuals: resident, ordinarily resident, resident, not ordinarily resident, third one is a non-resident. First, let us discuss about a resident. For a resident, all 8 incomes as aforesaid shall be included into his total income. Means, whether it is received in India or deemed to receive, whether it is accrue or arise in India or deemed to accrue or arise in India, whether it is accruing outside India or arising outside India, wherever it can come. Are you a resident? Yes. Income accruing within India we call as Indian income. Income accruing or arising outside India we call as a foreign income. Both incomes are taxable for a resident. Both incomes are taxable for a resident. So if you are a resident, ordinarily resident, for you, global income becomes taxable in India. Means what? Indian income is taxable, anyway taxable. Global income also will become taxable in India. Okay, means what? India, if anything is received or accrued or arised or deemed to accrue or arise in India, taxable. You are getting income outside India. You are getting income outside India. I am having a shares of a company located outside India. Company located outside India, shares are located outside India, business is performed outside India, success is coming outside India, profits are made outside India, distribution is made outside India, but the point, and income is not received in India. Income is received from a company outside India. But are you a resident? Yes, that is also taxable. Sir, that is not received in India. Arising outside India, accruing outside India, received outside, everything outside India. Even then, are you a resident? Yes. For the curse to become an Indian resident, for you, the sin is the Mahapapam that you have done in the last life is you are born in this country, na? Full tax. Example I am telling for a joke's sake. Okay, take it on a lighter note. So how the taxability will come na? Are you born in India? Are you a resident in India? Yes, sir. That's all. Full tax. Which tax? Tax on global income. Means Indian income anyway become taxable by default. Foreign income also will become taxable. Indian plus foreign we call as a global. So global income become taxable. Okay, well? So global income becomes taxable. Okay. Next question will come. Sir, I'm not a resident, sir. I'm a non-resident. I'm a non-resident. Okay. And then you are not a resident in India. Yes, sir. So still I have to pay tax in India. Na? Yes, for the first 6 incomes. For the first 6 incomes. What do you mean by that? I am a non-resident, but income is received in India. Na? Pay tax in India. Deemed to receive in India. Na? Yes, sir. Pay tax in India. Accrue or arising in India. Na? Pay tax in India. Deemed to accrue or arise in India. Na? Yes, sir. Pay tax in India. If India, some sort of connection is there, that's all. For non-resident also, it will become taxable. Okay. So in that case, only Indian income becomes taxable. Next, sir, I am not a resident fully. I am not a non-resident fully. I am a resident, not ordinarily resident. For me, what will happen? For a resident, not ordinarily resident, income mentioned in 7 and 8 are applicable as well. And one thing is clear. 1 to 6 non-resident ke applicable means resident not ordinarily, you need not ask that question. All the 6 are taxable for him. Okay. Last 7, 8 are there na. Adalana doubt will come. So 7 and 8 for resident fully taxable. For non-resident not taxable. For resident ordinarily resident in between via media concept came. What is the discussion here? Any income which accrue or arise outside India. Non-resident ki not taxable, resident ki fully taxable. But resident ordinarily not ordinary resident ki any income which accrue or arise outside India. Which accrue or arise outside India at 7 and 8. Okay, that is derived from a business controlled or profession set up in India, then include into total income. Sir, I did not understand. See, income is received outside India, accrued outside India, arised outside India, but that income is arising outside India or accruing outside India because of a business located in India. Income is really accruing outside India only. Okay, see, there is a company called as X Limited. There is a company called as X Limited. X Limited is their company. That company is having a branch in India. Business. That branch is doing a business in India. Those branch profits will be added to the profits of the company. Yeah? Okay. So, from that profit, dividend will be declared. And in my total income, there is a dividend apportioned to the business in India. To that extent, it will be taxable in India because though income is declared, though the dividend is declared by X Incorporated outside India, though you are a resident, not ordinary resident, everything is satisfied, but there is a connection for that part of income with India or not. To that extent, it will be included into the total income. Next, any income which accrue or arise outside India that is derived from any source other than business controlled or profession set up in India, not included into total income. Means if any kind of accruals are there other than that business connection, if any other income is there accruing or arising outside India, for R and OR it is not taxable. And how to understand this? R and OR will be given a status of non-resident, but one exception is there. If you are a non-resident completely, even if there is a business connect, even if there is a business setup in India or a profession setup in India, from that any income is accruing, for you it is not taxable because income is accruing or arising outside India. Where is X Limited? Outside India. Where? England. London. It is incorporated. X Limited is incorporated in London. Company located in London. Shareholders are from scattered across the world. Directors, London. Business is done in London. Branch is located also in India along with other 20-30 countries. Profits will come outside India because that branch profits will be taken by company in London. Okay. You are a resident or not a resident? I am a resident but not ordinarily resident. I am a resident but not ordinarily resident. In that case, for you that becomes taxable to the extent of the branch apportioned profit. If you are a non-resident, that also will not become taxable. So what you have to understand, there are 8 incomes. Okay, if there is some sort of India involvement, okay, for that income, if there is some sort of India involvement, income received in India, deemed to be received in India, accrue or arise in India, deemed to accrue or arise in India, for all the persons, resident, not ordinary resident, non-resident, fully taxable. However, last 2, accruing outside India, arising outside India, resident ki fully taxed. accruing or arising outside India, non-resident ki fully exempt, not taxable. But for resident, ordinary resident, that income accruing or arising outside India will become taxable in India if that accrual or arising of income is happening because of a business or a profession set up in India. For non-resident, even if it is set up in India, not taxable. First of all, everyone, please give a reply. Did you understand the discussion till now or not? I want one standard reply from all of you. Understood what I discussed now. The entire crux of section 5, just in one page, I tried to explain. Did you all understand? Okay, very good. I will go much further now. See, scenario analysis. Income received or deemed to be received in India. Condition 2. Income accruing or arising or deemed to accrue or arise in India. Status of that income, let us see. First, income received or deemed to be received in India? Na? Yes, sir. Income accruing or arising or deemed to accrue or arise in India? Na? Yes, sir. What income it is? Indian income. Income received or deemed to be received in India? Na? Yes. But accruing or arising in India? Na? No, sir. It is received only. Not accruing or arising. Directly received. Indian income. Next, income deemed to be received in India? Na? No, sir. But accruing or deemed to be accrue or arise in India? Na? Yes, sir. That is also Indian income. Income received in India? Na? No, sir. Deemed to accrue or arise in India? Na? No, sir. Then it is a foreign income. Indian plus foreign will become global income. Summary analysis for individual and HUF. Okay, because individual HUF concept of ROR will be there. Companies ki there is only one concept: resident, non-resident, firm, resident, non-resident, cooperative society, resident, non-resident. That's it. Only in case of individuals and HUF, resident, ordinarily resident, not ordinarily resident, non-resident, these categorizations are there. So let us see. Type of income. Indian income. Taxable in case of ROR, fully taxable. In case of RNOR, fully taxable. In case of non-resident, fully taxable. Okay. Foreign income. In case of ROR, fully taxable. In case of RNOR, taxable in two cases. Business setup in India or profession located in India. Two cases. In case of non-resident, not taxable. The above taxability is in reference to taxability within India. Summary analysis for other taxpayers. If it is Indian income, in case of company resident in India, taxable. Non-resident, taxable. Foreign income, for a foreign income, in case of a resident company, taxable. In case of a non-resident, not taxable. Okay, well? So first of all, everyone tell me, we completed section 5. Okay, just like that we completed a very big section in our syllabus. Section 5 is completed. I want your answer once. Everyone, did you understand section 5 properly? Yeah. Yeah, once we start doing the questions and answers given in exam, should not come. You should be participating in question answer discussion. Okay, well? Okay. I will give you 2 to 3 minutes time. Read the document first. Get the full clarity. Full clarity means absolute clarity you should have. Okay. Once you have that absolute clarity, we will go with next part and then we will go with the section number 7, 8, 9 like that. We will go on continuing them. Okay, completed. See, accrue means what? One question came. Accrue means income liability to the other party started, but I did not receive it. No worry. For example, interest, I deposited money in a bank account or I gave loan to a person. Okay, I said interest has to be paid once in every year. Due date came. Due date came. Okay, until due date ki, I will tell that interest is receivable by me. That's it. Accrual, not it received. Even then that interest will become taxable. Okay, everyone completed? Can you move to the next one? See here. Other points requiring attention. See, an income accruing or arising outside India. Income accruing or arising outside India. Ante the origin of that income is located outside India. That's called as arising. Arising means origin outside India. An income accruing or arising outside India cannot be deemed as received in India just because of the reason that entry is made in the accounts and is shown in the balance sheet. So just because of the reason that books of accounts entries were made, suddenly foreign income won't become Indian income. Okay. If income is taxed on accrual basis, means I said na just now, interest accrued in India and not yet received. He has to pay, due date came. Okay, since it is accrued, I will treat it as an Indian income and become taxable. Now, next year it is actually received. Again, I will not tax you. Since I already taxed you on accrual basis, on receipt basis, again I won't tax you. So, if income is taxed on accrual basis, again same income shall not be included into the total income on receipt basis, since income cannot be taxed twice. Next, receipt claims ownership for the first time. Remittance is something we do with the receipt. Okay. For example, I received income outside India. I received income outside India. Income arised outside India and a source outside India. From that income is arising. That income is received outside India. Income is received outside India. Who I am? Resident. Listen carefully. I am a resident. I am getting income from a company outside India, arising outside India, received outside India. Who I am? Resident. What income it is? Foreign income. Taxable or not taxable? Pakka taxable. Global income taxable for a resident. Ordinary resident. So taxable. Now I paid tax and I received amount. I received $10,000 after paying tax there. $10,000 I brought to India. I converted it 95 rupees each. Converted into 9,50,000. Government of India said pay tax. I asked why. They said income is received in India. Are muttal, income is not received in India. Income is remitted to India, which is already received outside India. On that already I paid tax. This is the concept he wanted to tell. Everyone understood the point clearly? Yeah? Do you understand the meaning of last statement? Receipt is different, remittance is different. Receipt means the first time coming into existence. Remittance means what you are doing with the receipt is a remittance. Okay, well? Done. Next discussion. Next discussion. Please listen. Please listen. See, summary of section number 7 and 8. Okay, summary of section number 7 and 8. Okay, observe this. Observe this means. See, section number 7 and 8. Section number 7 and 8. For a detailed discussion on 7, refer salaries. For 8, refer IFOS. Really also those two chapters we have to read. But now we will understand the overall idea. And if question comes from scope of total income, you will be able to answer if you listen to the today's class. But in-depth discussion will be made in salaries chapter and IFOS chapter. All you are clear to whatever I said now? Clear? What is required for this chapter I am discussing here. But what do you mean by annual accretion? How employer will pay? All these things salaries chapter I will discuss. Okay. See. One thing I have to tell before we start. If income is received in India, taxable. Income accruing in India, though not received, accrual started and taxable. Income source is arising from India, arising taxable. Sometimes deemed to accrue or arise in India, that is section 9, the biggest section in the entire history of income tax law, biggest section is section 9. 7.5 page, 8 pages bare act will be there. How many pages here? 8 pages bare act. Enna section? Section number 9. Anga paru? Section 9 started here. Page number you can see. 20th page it started. Till 92th page, section 9 is there. 72 pages notes I have written means, you imagine how big that section was. Are you clear? 72 pages section 9A will be there. You imagine how big that section is. If you complete summary notes, summary material, tables, answer, okay, fatafat, if you read now, 4-5 pages you can complete. But that does not give the clarity to the student at the end. Okay, if you need a clarity on section 9, you have to spend lot of time on that. Then you will become expert in section number 9. Are you clear? See, section 9 structure is the section 9 structure. Bare act analysis. If you start doing, see, this all complete. Everything is complete. Everything is linked to section 9. All section 9 related contents I have given in one single place. Sorry. We will discuss also about that at a later stage. When really a time comes to us, we will discuss. Now let us see the summary of section number 7 and 8. Okay, well, listen. Number 1, section number 7. Income deemed to be received in India. Income deemed to be received in India. Okay. Now, all the students, you please tell me why we call it deemed to be received. Don't tell we actually did not receive. Don't tell that nonsense to me. Annual accretion to the credit of employee, contribution to RPF, all these things, why they came to income deemed to accrue, income deemed to be received. Answer, yeah? Adi kada knowledge. Any fool in this India, okay, mark my words, any fool in this India can mug up the concept and remember income tax. Correct? That's a great deal. Animals also will do if you train them properly. Okay? See, last, just example sake. Example, 3 days back when I was in Sacramento, I went to California. Na? I took a flight from Texas to Sacramento. Sacramento, capital city for the 7 trillion economy state, California state in USA. Capital city, Sacramento. From Sacramento, I have to go to San Francisco. Okay, from there, over car, we need to go to San Jose for the exam center. So exam over, 2 days exam completed, given well, satisfied. After that, I got around 8-9 hours time between flight and this. So there is one sea world here. Okay, I will put the video also very soon. So you should see that really they trained beluga whales. Okay, they trained killer whales, beluga whales, dolphins, all these things. Amazing show. One should never miss in their life. Like that they trained. Then I understood. If animal, see, one person will be standing, he will show the hand gestures like this. That's it. Dolphin will turn in the air for 7-8 times and it will fall. They are well trained. Okay, like that. When I am seeing that, students also doing the same thing, they are not putting any mind technically. It's not to insult here. Really, the observations I'm trying to explain. Okay, if you prove me wrong, then I will be the most happiest person. So that students are thinking in a different way. Okay, what they're doing, they're taking one summary material, summary notes, 5 pages, all the concept completed, super, that's it over. How much I am understanding, how much is going inside my mind, how much I am putting in practice. In future, how this section will impact me. If I do not learn today, how many are really thinking? See, he is making hand gestures, dolphins are jumping, whales are jumping. Size, they are almost size of elephant. Mind, nothing is there. If we do something, he will do. It will do. Okay, if the trainer is there, if we tell run, or some gestures, hand gestures, they can't listen. Hand gestures they give, they will do. They are well trained. Okay, please do not become well trained. Okay, please do not become. Then there is no difference between human being and animal. They are also trained. They are also doing whatever the instructions were given. Don't act on instructions. Act on instinct. You should understand. See, answer will be there. Annual accretion to the rate of employee not exceeding 9.5%. Any amount in excess of RPF amount or balance transfer from URPF account or contribution to any national pension scheme under section number 80 CCD. All these are incomes deemed to be received in India. The animal also can do. That's what I'm trying to tell. You got my point, right? For this, we need not become human being. Animals also can do this. After seeing that, I understood that. Do you understand my point, everyone? For this, human beings are not required. Not at all required. After seeing that, that is the first, momentarily when I see that, the opinion I formed it, for that, human being are not required. If you wanted to discuss like this, you should understand the essence, the wisdom. Okay, there is a difference between intelligence and wisdom. Intelligence means what? Remembering things, using your expertise. That's remembrance. Animals also are having intelligence now. But wisdom, applying the concept, understanding pros and cons, how to apply, when to apply, that is only for the human being. It's a God gift given to the human being is wisdom, vivekam, not the intelligence. Intelligence, artificial intelligence also there, Computer also is having intelligence these days. But computers don't have wisdom. Artificial wisdom is not there. If you search something which you should not search on online, computer will stop you. No, it is showing everything. All nonsense it is showing on internet. It don't have any wisdom. But if really computers are having wisdom, they should tell, "Arey idiot, why you are searching for all these contents which are banned? Don't see." That is the wisdom. Computers are having intelligence. It cannot have a wisdom in mind. Clear or not, everyone? So, act with wisdom, not with intelligence. Intelligence, dustbin also will have intelligence because it will keep lot of dust inside it. Okay, lot of trash bins will hold, a lot of memory it is holding. Dustbin also have intelligence. Okay, intelligence vechiko, no problem. You keep it with you. But you should have wisdom. Why, what, when, logic, the technicalities behind. That is the human being ki, dustbin ki difference. So, please, listen with a kind heart that you should learn in a proper way. Okay, you should learn in a proper way. So don't drive by unnecessary, what is that, 5 page, 4 page notes. Learn properly. When you are learning, learn properly. Because you are learning not for exams, you are learning for life. Because after you become a CA, if you go into a company in a tax division, you should know income tax. If you set a practice without income tax, we will become beggars on road. You know that very well. And in what way you are daring for not understanding income tax act? Other final students also I tell. Do you know what I said to the final student recently, one day before? I am taking one chapter called as a transfer pricing. And a chapter here, transfer pricing chapter for CA final student. If any of your friends or colleagues or relatives are taking DT class CA final, you can ask them, really did he say this? Transfer pricing chapter was getting discussed. Transfer pricing chapter, normally 1 hour or 1.5 hour, people generally they are spending, when I see in YouTube or some sources, we spent 14 classes on understanding models on transfer pricing. Okay, why? Recently I have taken an interview with Air 9. Okay, Gokul. Okay, na? Do you know what he said in that video? You can see. He said, I asked him, what about your articles? He said, sir, I am taking my articles from KPMG Hyderabad. Okay, he is from Hyderabad. So he got All India rank 1, All India in Inter, All India rank 9 at final. Okay, since that fellow is from Hyderabad, I have a rapport with him. So I asked him, in that video also I asked, articles lo what you have done? Do you know what he said? He said that I was into the international taxation division. International taxation means what? It is not a general domestic transactions on tax. Okay, what? Listen, I will tell you way. If you see my document here, non-resident tax scheme and scope of total income heading, correct? Do you know why? This note was written for final students, but I discussed the same for inter students also. Syllabus like everything is there. Final what is there, inter also there. Discussion like differs, but I do not see inter students and final students as two different entities. Both need to have the same level of knowledge. But if content itself is not applicable for interna, if I discuss that, it's my mistake. I never do that. But when I have to discuss a concept which is applicable at interna, I don't differentiate between inter student and final student. Inter student smaller, and inter papers are coming looser. They are making tight discussions in inter paper. They are making students' life miserable. Do you know what that ranker said? He was into international tax division. There, he applied all the transfer pricing and DTAA provision, double taxation avoidance agreement. In that video, I asked him also. So you are doing the agreements between India and Mauritius, India and Africa, India and European countries. Did you do? He said, yes, sir, we are doing that. Are you clear? Huh? You can ask last batch CA inter students. Live I conducted for them also last time. If anyone listening to that live, please put a message. Did I show you the DTAA agreements to you or not? Students who attended the last time DT class online. Didn't I show the DTAA agreements? Double tax avoidance agreement when we are discussing section 9. See the comments. That's why I always tell very clearly, see, the method what I follow, okay, will take time, but will drive towards the success. Because I never prefer any short route for success. There is only a hard rule, a tough rule, a long rule. Okay, what comes very quick will stay with us also only for a shorter period. Learn in a proper way. Take time and go to success. That success will be with you till life. If any success comes very fast, that will go from you also as fast as possible. Clear? So have consistency in your play. Do you understand? If you are playing super in one match, next 10 matches unpredictable. Though you are super bumper great, history will not remember you. Classic example, Virender Sehwag. I love one of the most interesting batsmen that I have seen in my life is Virender Sehwag. Such a great batsman of his kind. I never saw a cricketer like him till date. But history, no one will remember Virender Sehwag because of lack of consistency. Means what? One match you will hit 300. One match, next 20 matches, you don't even score 20 runs. Why people will remember you when there is no consistency in what you do? You are greatest player. I love you so much, Virendra Sehwag. But when a person asks me who is your role model in cricket, first name that I will tell is Sachin Tendulkar. Whatsoever happens with Virendra Sehwag, reason? The consistency over 30 years. Clear, huh? That consistency makes everything. Yeah, people want that consistency in doing something. Why Apple is successful? Why OnePlus is unsuccessful? OnePlus sprouts out its main wings in 2014-15 time. 2018 ki gone over. Ante OnePlus came beggar over. OnePlus company gone now. Company is there. Sales gone. Why? So one moment 2017-18 time I remember it almost reached the sales of Apple in India. It surpassed also in 2017-18 year. Now no one is buying OnePlus phones. Very few. Why? Where the mistake happened? Inconsistency. Okay. Inconsistency. Where is the consistency? A consistency if you don't have, people do not consider you when they want something good. See, fast life, anyone is giving success now, one moment they will go to them. But people prefer always consistency in doing something. You should be consistent. Suddenly success will come, suddenly failure will come. People do not like. Okay. Though people throw stones at slow paced learning, why I never change it? Reason being, success comes only with consistency, not with hard and fast rules. Clear? So therefore, what I wanted to tell is, see, you are learning things. Okay, you are remembering and putting intelligence, not wisdom. Learn things for the sake of wisdom, not for intelligence. Okay, then people will remember you for long period. First, you will remember the Companies Act, income tax, FM, costing, whatever it is, in a consistent format. Learn consistently, do hard work consistently, learn in a proper way. Clear, everyone? Beyond that, I can't tell you anything. I've shown you so many examples who are successful by putting consistent efforts. Are you understanding? Consistent efforts. So there are so many people to take as an example. Consistency should be there. You should do every day small work. Slowly you do the success. You go to the success. 2006-7 time, 2004-5 time onwards, Elon Musk is putting efforts. 20 years after he became a trillionaire. 2006, 4, 5, 6 time when he started, nothing is there. Consistency. He did not stop his hard work. He continued it. People thrown stones against him. People said your logic is waste. Your concept is waste. Your things are waste. Your ideology is waste. But he never stopped his way. He went in the way he wanted to. Car means it should not have engine. Car means it should not have driver. People laughed at him. People insulted him. People thrown stones at him. Today he became a trillionaire. The first trillionaire in the world. Why? They believed in them. They believed in consistency, not on the dogs barking at them. If I start throwing stones at the dogs that are barking at me, my hands will become dirty, stones will be completed, but dogs will still bark at me. Hopefully you understood the point clearly here. Everyone? So don't throw stones against the dogs barking at us. Time waste. Do your work consistently. Learn things properly. People will tell, this is wrong, this is right, this is wrong. You have mind. Na? God has given you mind. Na? Apply wisdom. What you are doing right or wrong, you know, na? Whether others know or not. Apply your intuition. Apply and go as per your point of view. Okay. Don't get influenced by any word. Go by what you feel right or wrong. God has given you the gift, mind, to apply. Rest left to you. So now come back to the point. Why these are deemed to be received? Listen, I will tell you one point. Common sense again. See, I opened a PF account. PF account, my salary will be deposited. Salary will not be 10% of salary will go to PF. My salary 50,000. 5,000 rupees my contribution, 5,000 rupee employer contribution. Both contributions will add and will go to one account. That account we call as a PF account. So to the PF account credit, it will get deposited. Okay. In that account it got deposited, you can't withdraw the amount. You can't withdraw the amount. Further, there are rules again to withdraw. That all anyway not applicable for us. We will discuss when we come to IFOS chapter. So annually your PF account get accretion. Accretion means increase. This month 5,000, 5,000, 10,000 deposited. Next month another 10,000. Like that 12 times 10,000 got deposited. 1,20,000 is deposited in your PF account. And your PF account is loaded with amount. On that interest will come or not? Yes. That interest will get added again. For example, 1,20,000, 8% interest. Let us say 1,20,000 into 8%, 9,600. If you add, it became 1,29,600. Can you withdraw? Cannot withdraw. Cannot withdraw. 1,20,000 is your PF balance. 9,600 is your interest part. That interest part will be added to the PF balance or not? But in reality, did you receive that interest? No, I did not receive. But that 9,600 will become taxable by deeming it as received in India. That's what he wanted to tell. But that should be more than 9.5. In my example, how much I have taken? 8%. How much? 9,600. So no tax. For example, I received 12% interest. 14,400 I will receive now. 14,400 la, okay. So 1,20,000 into 9.5%. 11,400 minus 14,400. 3,000 will be deemed to be received in India. That is the logic behind this section number 7. Everyone answer now? If you do practical questions, you will get more clarity. I will do, hey, I gave one page gap here if you see, page gap. In the page gap, one big illustration I have. I will do it for you. Okay. Next classes, not today. Next class, when you are doing illustration, we will do one very good illustration on that. Then you will really appreciate the logic as well. Okay, va? Yeah. So these all are deemed to be received. Really, I did not receive. Just it is credited. But lawmaker will deem that it is received. So annual accretion to the credit of employee. Interest in excess of 9.5%. Excess contribution by employer in PPF. RPF. Excess contribution by employer. This interest illa contribution. See, employer can contribute up to 12% of salary. He contributed 20% of salary. Up to 12%, no problem. But balance 8% is there. That becomes deemed to be received in India. Though he did not give to you, you did not receive, he deposited in PF. Lawmaker says like this, that PF account balance, one day you will receive. So I will not wait till then. I will deem to receive this year itself. Next, balance transfer from URPF to RPF. Balance transfer from URPF to RPF. This I will discuss here. You should understand this, so take time. Contribution to NPS. This we will see in deductions chapter. So that's why section 7, don't take it seriously. Just read it normally now. More discussions we will make in different segments. So annual accretion to the credit of employee, excess contribution by employer in RPF, balance transfer to URPF to RPF, contribution to NPS under section 80 CCD by the employer. In all these four cases, income is deemed to be received in India. Remember things this way. When we come to the respective chapters, we will do in-depth discussion. Next, dividend income. See, dividend, morning law class we discussed dividend. Just morning. Everyone, we started with dividends chapter. At that time also I said, dividends is there also in income tax. So morning we made the discussion on that. Yeah, we are going to continue that discussion now. See, dividend income is governed by section number 8. Dividend income is governed by section number 8. See, there are two discussions we need to make in dividend. Discussion 1, section 8. Discussion 2, section 2, clause 22. 2 clause 22 discussion will happen in IFOS chapter. 8 discussion will happen in this area. Okay. Section 2 dividend will be discussed in IFOS. Section 8 discussion today we are going to discuss. Okay. Dividend is of 3 types. normal dividend, deemed dividend, interim dividend. Okay. Normal dividend, dividend declared by the shareholders at AGM. Interim dividend, dividend declared between two AGMs. Both the cases, dividend declared and received are. So, if the dividend is declared by Indian company, I call it Indian dividend, taxable for all because income is arising in India. Foreign dividend, taxable only for resident, ordinarily resident. Deemed dividend, deemed to be received in the previous year. About this IFOS chapter. That's why what I have written, deemed dividend, dividend referred to in section 2 class 22 subclass A to subclass E. Adilla subclass E, subclass F actually, because the buyback is also deemed to be dividend now. So when we come to buyback, we will discuss. So with this, we completed section number 7 and 8. See, section 7, 8, as of now, look at the chart and read. More discussions we will make in the respective discussion areas. Okay, va? Read it. Section number 7 and section number 8. 3 minutes time I will give. Fastly complete reading it. Okay, well. So what we completed now? We completed section number 5, section number 6, and section number 7 and section number 8. Okay. Accretion means additions, increase. So we completed 6 in the last class itself. So now completed 5. So series what we completed? 5 completed, 6 completed, 7 completed, 8 also completed. Okay. So 5, 6, 7, 8 completed. Next. This all I will discuss in salaries chapter. Yeah. Provident fund you forget. Okay. I will discuss separately. Sorry. This is all summary of section 9. I will discuss about the summary much later. Okay. First let us discuss about section 9 in a full length way. Okay. See here. Legislative structure of section number 9. Okay. How section 9 will look like. Okay. How section 9 will look like. Section 9 is having totally section 9, subsection 1 and subsection 2. Okay. There are very kuti small section 9. Like this you should not think. Section 9 there are 2 subsections. Subsection number 1, subsection number 2. Subsection number 1 and subsection number 2. 2 subsections are there. Subsection 1 lost its relevance, it's not there. Ardhata we are having only one subsection. Section number 9, subsection number 1. Okay. In that section 9, subsection 1, clause 1 to clause 8. There are 8 clauses. Okay. Subsection number 1, clause 1 la again there are 4 limbs. Limb 1, limb 2, limb 3, limb 4. All put together we call as a legislative structure of section number 9. So section 9 na first clarity in thought. 9 subsection number 1, class 1, subclass, class 1, class 2, class 3, class 4, class 5, class 6, class 7, class 8. Okay. Class 1 again there are 4 limbs, limb 1, limb 2, limb 3, limb 4. Okay. So what is section 9? Incomes deemed to accrue or arise in India. And really it is not arising in India. Really it is not accrued in India. I will deem that it is accrue or arising in India. For that section number 9 has come. Tremendous amendments have been made by the Finance Act 2012. Honorable Finance Minister at that time, Pranab Mukherjee. Okay, Pranab Mukherjee. He has made all the changes to this section number 9. Tremendous changes. Vodafone case law used to happen in 2011-12 time. When I was writing exam, Vodafone case law is a compulsory question in exam. Came in exam also, CA final direct access paper law. The very important case. Judges have spent months together drafting the case judgment. Pranab Mukherjee, one Finance Act amendments he brought to the budget. 2012 Finance Act budget, he made amendments, brought explanation 4, explanation 5, explanation 6, explanation 7, removed all the court and tribunal judgments. One tribunal judgment, it is not available now. All are deleted by Finance Act. So how many changes he have brought? All are enshrined in section number 9, subsection number 1, class 1, 2, 3, 4, 5, 6, 7, 8, and subsection 1, class 1, limb 1, 2, 3, 4. These are all the structure of section number 9. Okay, va? I know that this can't be completed in one day. I'm not going to make that discussion today also, but I wanted every one of you to have a clean slate of understanding section 9. Okay, I don't want you to behave like any other normal student when you're reading section 9. I won't take like in CA final. I won't take just like normal person at CA Inter. Moderately, I will make you understand section 9 by giving good amount of knowledge in understanding. Are you all ready to take the knowledge, everyone? Answer, yeah. Final it with this section I have taught for 24 hours. I am not telling that I will take you for 24 hours. Okay, 24 hours or 23.36 hours or something came. This only one section, section number 9. Because I discussed section 9, DTAA agreements along with international tax provisions, non-resident taxation. All these I brought in one set and I explained to them. Okay, for interlaw, generally people are teaching for 1 hour, 2 hours or max 3 hours. Like that also I don't want. I wanted you to learn it in a proper way. Clear, everyone? Okay. Yeah. Listen. Section 9 has 2 subsections, 8 clauses. First clause ki 4 limbs. First, let us see the structure. Section 9, subsection 1, 4 limbs. Business connection, income from immobile business. In India is a common term. Income from business connection in India, income from a immobile property in India, income from any asset or source located in India, income from transfer of a capital asset located in India. Okay, tell me. Concept of business connection in India, income from immobile property in India, income from any asset or source located in India, income from a transfer of capital asset located in India. Next. 9 subsection 1 class 2 and 3 salary income. Different types of salaries will be discussed in 2. Dividend income, interest income, royalty income, fees for technical services, miscellaneous class 8. Okay, what? First, section 9, subsection 1, class 1, read with section 9A. Section 9, subsection 1, class 1. Class 1 la limb 1 we are discussing now. Okay, basic provision from the Bear Act. The following income shall be deemed to accrue or arise in India. The following income shall be deemed to accrue or arise in India. The following incomes, and so many incomes are there. In that one we are reading now. All income accruing or arising, whether directly or indirectly, through or from any business connection in India, or through or from any property located in India. First one, business connection in India. Property located in India. Asset or source in India. Transfer of capital asset in India. I have 4 limbs. Now, did you understand what I mean by 4 limbs? Everyone reply, yeah? Now, do you understand what I mean by the 4 limbs of section number 9? Okay, so limb 1 is concept of business connection. Second one is income from immovable property. Third one, income from a asset or source located in India. Fourth one, income from transfer of a capital asset. Okay, all are located in India. Then it will be deemed to accrue or arise in India. Discussion we will make in the next part of the class. Okay, I'm just showing you the overall idea. So, section 9, subsection 1, class 1, read with section 9A, read with class 1, limb 1. Okay, concept of business connection. Concept of business connection. On that, we will see one case law, understand it. Then we will go with the meaning of business connection. Then we will understand the idea behind this. There is a case law that was given on this. Okay, case study number 1, Amadeus Global Case Law. Next one, explanation number 1B to the 91A, 911, explanation 1C, like that we need to go. So this discussion takes time. Therefore, I wanted to strategically plan our classes. Students should never feel that we are spending a lot of time only in one concept. Therefore, what I am trying to do now, see, I will tell you the strategy. See here. Next class, when we start with GT, we will do question bank discussion on section 5, 6, 7, 8. We'll complete question bank completely. Means what? As I promised, concepts are completed. 5, 6, 7, 8. 9 a pending. Remaining everything is complete in that chapter. So 5, 6, 7, 8 exam questions let us do. First, there are 21 questions in exam on 5, 6, 7, 8. Let us do all those. We will complete them. Once we complete, what will be left out? 9. Okay. Next, what I will do now? Directly, I will start with capital gains. Okay. Directly, I will start with capital gains. Whenever DT is there, 45 minutes I will take section 9. Balance 45 minutes I will take capital gains. Such that parallelly every day we will learn both. 9 will take around 5-6 days. Once completed, we will completely dedicate to capital gains, such that one new chapter will start parallelly and you will also have a clarity on section number 9 in a slow movement consistently. Clear, everyone? Yeah. So this is a point here. So time is not there for doing the question bank. I'm leaving you for now because almost the time is around 11:34 now. Now time for you is 10:04 in India. 10:04 p.m. DT already I shared complete PDF in my group. So today in Telegram group again I will reshare. Okay, va? By the way, tomorrow results, na? I mean tomorrow, not tomorrow. For you, tomorrow only. Today is the 23rd night for you. 24th results, na? Okay. So tomorrow results. Are you able to attend the class then? Everyone? Tomorrow can we have class, huh? Will your mind accept the class? Yes, yes, we will start early only. After some number of days, definitely. I will take your word. Okay then. So if it is okay for you, okay. Okay then. Thank you, da. So we will discuss in the balance in the tomorrow's class. Okay. Yeah. Okay then. Thank you. And great spirit here. Almost everyone is saying we will have the class. That's the spirit of a student. Always, nothing should affect you in any way possible. Your work should go on, irrespective of what happened. Okay. In the WhatsApp not required. Telegram is again resumed. Na? We will have discussions on Telegram only. Okay. So thank you very much. Thank you. Good night. Take rest. Tomorrow, no results, no problem. It will be positive. Okay.